Hope everybody's having a good weekend. I wanted to touch this weekend on a few stocks, one particular that I got in, I believe on Friday, and um, just touch on a little bit about the overall market, um, software stocks, just give my opinion on some software sector stuff. So a trade that I took also on Friday that worked out pretty well. But let's start off with the S&P. So we had a big correction day on Friday, and I have this target system that I use that is actually really good at finding areas within the structure. As the price was going up higher and higher, there's certain areas that in the overall structure that need to be repaired. And the system that I use marks these various targets. And generally, on average, there's about 100, or actually, there's about 650 targets per year that pop up. And, oh, I don't know how many. It's been several years that the system's been generating these targets. And overall, there's about 15,000. It should be 15,600 targets. And only 59 of those have not gotten hit. So it has a 99.62% success rate. And keep in mind that some of these targets can act as resistance, some of them can act as support, and some of them just need to be taken out. They'll all get hit. Majority of them will get hit. 99 point whatever will get hit. And this is the most targets that I've seen that have not gotten hit thus far. I've ever seen. So there's one, two, three, four, five. There's nine. There were three that got taken out on Friday, and then Friday generated an upper target. So I'm expecting a bounce. Market towards the end of the day did bounce some. Let's see here. Of a bounce, say in the last 45 minutes. It wasn't much of a bounce, but it did bounce some. And this is mostly retail. Institutional investors are not going to contribute to the last 45 minutes of the day. So this is all retail or maybe even some just people that are just trying to cover their shorts before the weekend or close out some positions before they go into the weekend. But overall, these targets are gonna get hit, and so we got a lot of downside here, a lot of correcting to do, and I don't think it's gonna come down in a straight line. I mean, it'd be nice if it just took everything out in one day, but that's not the way the market works. I'm expecting a lot of chop, a lot of bounces. I am expecting a bounce on Monday. This is a very large candle. What is it? 2.64%. Yeah, 2.64 on a percent on a single day, which is fairly big. It took back all of this excess move here, and so I'm expecting a bounce. Now, it would be nice if it bounced back up to this target at 7,442 and took that out, and then resumed the downtrend. That I've been doing in another portfolio is buying puts, these particular strikes as the targets, and I'll just monetize them as it gets closer, and then leave a few runners, and that's been working out pretty well. But yeah, there's quite a bit of downside left, and I think that like I said, I think it's just getting started, this correction. So one of the things that I wanted to go over was Bitcoin. Big down day. I mentioned earlier in a previous video that I expected it. I expected us to revisit these lows, and I also expected a bounce. Like I mentioned before, when you always want to expect the expected in certain areas, and it bounced here previously. It bounced off of this line before, and it wicked down. It was kind of a look below and then fail as it wicked back up, and now it's just going right through it. So these levels, these zones that I trade, there's only so many times that it can get hit before it just goes right through it. Now, it did bounce back up, and it is up today. It's Sunday, and it's up 2.26%. So it's back up above 62,000. But this is not impressive. I'm expecting more downside in Bitcoin. You know, the narrative has changed since peaking back in October of last year, and recently there's been a number of people that have been very public about them selling their cryptocurrencies. Mark Cuban came out and said that he sold all of his crypto. Um, there's been a few other ones that are on Twitter that posting, and then you got Michael Saylor, who they only sold 52 Bitcoin, I believe, and it was mostly just to keep their company afloat. But overall, if the price continues to trend down, I expect them to sell more. And they were the biggest buyers, them and BlackRock, and those ETFs can go the other way too. They can be buyers, but they can also be sellers of Bitcoin. So it could this could gain some momentum to the downside. I have a few support targets according to the structure at of course 62.5. It didn't quite get down to that level, but that's the first support. I got another 41, close to 42K, and then another one at 26 and a half. So I'll look to see how Bitcoin responds in those support areas and just take it at that. Short. I'm still short some of the miners, but I'm also short MSTR. When they announced that they were gonna sell Bitcoin, I went short. I bought puts in one portfolio in the Substack portfolio. I bought puts in another portfolio. I bought puts as well as shorted shares, and I still expect it to come back down to this green support area at 102. Right now, I have these zones that, let's see, there's support right now at 120. I don't expect that to hold, although I do expect it to bounce tomorrow. I don't believe the bounce is going to be significant, and I think we're going to revisit these lows again. And then once it gets into this 15 to 116 trigger area, I expect it to accelerate down to that buy the dip area, which is at 110. So it gets down to this area. I may just maybe exit like a quarter of the puts that I have, and then if it gets down to the 101 or sorry 102.15 area, and I will probably exit maybe another quarter, and then leave the rest to see how low we can go. STR. I mean, this thing could. I mean, no telling how far this thing could go down. Let's see. down to the, say, maybe low 70s, somewhere around there, and then get another bounce. If it gets down to there, then I would definitely sell another quarter and just leave one quarter left to run and see how far it can go. If for whatever reason this market throws a curveball at me and we bounce significantly and probably take back 128, just close my puts. I don't want to. I don't want to lose on this position. Uh, there's no need. There's no need to lose on this. If for whatever reason we get a squeeze and it comes up above 128, I may just exit my puts. So that's kind of my stop loss. And what do you want to look at the miners? So let's look at CleanSpark. So the miners have been behaving like I mentioned previously. Miners have been behaving differently than Bitcoin, and I think what's in play here is that they're viewed as extra energy capacity for AI, and so they've bounced significantly since yeah, April. CleanSpark's been in this uptrend since April, and it stayed within the trend, but then it fell out of it early on Friday, and then recovered back to kind of be borderline back into the channel. Came down to this buy the dip area that I have in blue, and now it's above support, and it's within this yellow pinning box that I have. So according to the options market, the dealer's going to want to pin the price to this area, which is at 15.50 to $15. And so they're going to buy the rips and sell the dips. Oh, I'm sorry. They're going to, yeah, buy the dips and sell the rips. Um, if it's able to get back up to $16, that could trigger the price to accelerate up and fill these gaps back up to 17 and a half. So there is a possibility that it could resume the uptrend fairly quickly. Now, I'm not going to get back into any of these miners. I'm just telling you how, if I were to trade them, this is how I would trade them. I want to see strength. And you saw it a little bit towards the second half of the day on Friday. Uh, but you want to see some follow through now. And if it can follow through and move back into the channel, move back above to this trigger area, and then continue to have some price acceptance above into the gap, that's bullish. That's showing some strength, and likely it's going to get pulled up to resistance. And this is the area where it originally broke down in. So if it's able to take that, then that shows some resilience. That shows that its momentum is picking up to the upside, and it would certainly be a good trade to take, using maybe resistance as a stop if it gets above there, and then you would just simply target. I think I have 1990 right now, but majority of the people are going to be at 20. But I would probably take profits a little bit early on this trade. But that's what it's going to take. Now, if it breaks below Friday's low, chances are it's going to fall even further and may even break this structural support. So when it breaks this structural support, this channel is now voided. There's no chance of it resuming, and it's probably going to go down to the next level support, which is probably at the bottom of this range. When these things start to fall, I don't know how far they're going to fall, They can fall fairly quickly, but I would expect it to come back down to the lower part of the range if it does collapse. What was it? But overall, I would say that the bullish thesis is hanging on here. Okay, it's not completely wiped out. The bulls aren't completely gone. There are some bulls still left in the stock, so it could recover. In the case of Iran, I would say that it's probably in a worse position than CleanSpark. Um, it's kind of just starting this trend upwards, and it broke through it, and yeah, it hasn't come down to this buy the dip area. It wick back up, but the one thing that I look at in terms of these levels and determining these levels is I look at the options structure and I use them to determine the levels, but I also use the charts overall. So I use a combination of TA and a combination of option structure. But in terms of the option structure, one of the sites where I get my options data from is called Gamma Edge. And one of the tools that they've developed is called this JEX ratio. And it's kind of synonymous with a put call ratio. And put call ratios are generally used to determine whether something's bullish or bearish and so forth. But the problem with how those are calculated is that they don't take time into consideration. They just take all of the calls, all of the puts, and some of those calls and puts could be far out of the far dated leaps and so forth. And so those should not carry as much weight as the near term options or the near term calls and puts. And so they developed this thing called the JEX ratio that takes into account time. And in the case of the JEX ratio, anything above one is considered, slightly bullish. If you get to the three and the fours, that's significantly bullish. And once you continuously get above there, and I think at one point I think iron was about above seven, and now it's at, or I think on Thursday it was 5.2, and then on Friday it just completely collapsed down below one. Below one is considered the way if you don't understand options, that's fine. I don't completely understand it myself, but just think of it in the sense of that if you have a chair that has five legs to it, there's a lot of support there. You can jump around, you can stand on it, you can dance on it, whatever. It's gonna hold for the most part. If that leg, if most of the legs are taken away and now it only has one leg, chances are it's going to be pretty flimsy. It's gonna wobble. It's gonna do a lot of things that show that there's not much stability to it. So right now, IREN is at 0.77, and so there's not a lot of stability there. As a matter of fact, it could certainly flip the other way, and you could get acceleration to the downside. Um, and so that's my concern whenever you see this kind of drop. It could go the other way if you're long. So I would be careful with this particular stock. There's a lot of headway it needs to make in order for it to get back into that bullish uptrend that it had, and to regain all that support that it had. Um, so I would just be careful of it. Again, I'm not trading these. These are there's better options I think right now, and honestly, I don't think that. I think the whole market's going to correct, and I don't want to be caught on the wrong end of that. Right now, I do have some short positions in these miners, so I am biased. But I am. I took some profits. I took about half of my profits in most of the miners, short positions on Friday into the evening. Um, I just think that there's more room to the downside, or more risk to the downside than there is to the upside. So, uh, Cypher looks really. I would think of all the three so far: Clean Spark, Iron, and Cypher. Cypher looks the most bullish. I'd have to go back and look at the Jex ratio, but I think overall it looks pretty good. It bounced right off of support on the second half of the day, put in this reversal candle. It's coming up right to the trigger area. Uh, so it's at 22 and a half to 23. Once it gets above 23, it's going to accelerate higher up to this $25 target, and then again up to the 27, and finally to the top of the channel. But this one looks it looks like a good setup because if you were to, let's say you were to enter tomorrow and it's flat, um, as long as it holds above this 22-32 area, you're good, and you can probably use that as a stop. Um, so there's a very little. It's on the stop is on a short leash right there, so that could be a possible setup trade for tomorrow. Again, I'm not taking it, but if someone were to want to get into this, there's a low risk setup right now for it. Yeah, Wolf again. I mean, if you look at the bigger picture on some of these miners, they've put in these months of consolidating within a range, um, series of higher lows, consolidation period, and then just broke through, and now it's wanting higher prices. Um, it's consolidating right now, whether that's for the next move up or whether it's going to be a several months like it did before, consolidating before it moves up again. I don't know, but yeah, there's definitely some people still holding this stock, and so I have two trigger zones, one to the upside here at $25. If it gets above there, it's going to squeeze to just about 25.75, and then maybe even challenge the all-time high. If it breaks this lower trigger area, 7, it's going to go back into this buy the dip area, and I would simply look to see whether people are waiting in this area to buy. If not, it could come to the bottom of the or the loss of the uptrend, and then fall out of this consolidation zone. And the next support would be back at the previous breakout, which would be about $17. So, but it doesn't look that way. It looks like it's wanting to consolidate, which is a good thing if you're long this stock. Yeah, similar to Wolf, it's just wanting to consolidate in this area. Now the range may tighten, um, consider this past move, but it's finding support. It's it hasn't broken out of the range. It's just consolidating. I think that Riot was also one. Yeah, this is a beautiful consolidation pattern right here. So you have to think that if it's been consolidating for this long, the breakout is still relatively new. Or so it simply has just come down back to that close to that breakout area. If it stays out of range, that's significantly bullish. Um, because I don't think that it would just put in all this consolidation just to break above and just not do anything, or even just to come down. I think it wants to try and stay above that consolidation area. And just like a wolf, it's put it in these series of, well, not series, but higher lows. At least it should challenge the all-time highs. Simply looking at from say 6.5 to 23, difference of that would be the measured move higher. So Riot could significantly run. So there are some mixed messages among the miners. So right now, I would say that Wolf, Riot are probably the most bullish looking. Bullish and neutral, I would say. More leaning more towards neutral, and then Iron is definitely the most bearish. Clean Spark is probably neutral. Again, expect that the correction. Sure, we may get some bounces in the market. This looks like it's more aligned with the market than with Bitcoin. But I'm sure Bitcoin, if it were to collapse, would have an effect on these miners. So just keep that all in mind. Look at one of the stocks that I entered on Friday was Granger. So I don't know if I. Yeah. So I follow this guy named Rob Reynolds. I know some of y'all are from his Substack or are in my Substack as well. I think he does an excellent job of just going over the macro view and then looking within the macro view at certain stocks that have favorable fundamentals that may start to trend. He does a type of trading style that I don't follow. I'm not a long term investor like he is, but he's done incredibly well over the years at figuring out the macro view, finding out stocks that would be a part of that view and do well in that type of environment. And he's been very successful. I a lot of people always ask me where do I get some of these stocks from, and it's from things like this. And there aren't a lot of people on Substack that I think have good views on the overall economy, on particular stocks that put out a lot of value for what they charge. And I think his Substack is probably under $200. I can't remember, but whatever it is, I've done very well with some of the stocks that he's mentioned in his Substack. So if you're not a subscriber, I would give it a try if you're interested in knowing some fundamentals about stocks and getting an understanding of the macro view as well. So he mentioned that according to his models, that manufacturing sector was reaccelerating. And on Friday, we got the non-farm payroll numbers, and it showed that there was a 7,000 increase in manufacturing hires, and so that kind of confirms that hey, this manufacturing sector may be reaccelerating. And one of the stocks that I had in my list of manufacturing stocks was Granger. And when I saw it in the morning, it was getting ready to break this previous candle, this previous high, and that's when I bought. And I'm extremely happy to be in this stock now. It's putting in this cup and handle pattern. Um, Generally, when you see this type, and this is a textbook cup and handle pattern, when you see this type of pattern, and it starts to form the cup, you want to initially buy on the break of the cup. Some people, they will wait till the brim of the cup to buy, but I generally, if I can get in on the break, I want to get on the break, and then as it approaches the brim, you could buy another some more of the position, anticipating the break. And then once the break is confirmed, and in this case, I see this as a confirmation in that it broke above, it came down, it tested that brim, it moved up higher, it could not move above the previous high. It came back down and tested that area again several times. And now it's breaking out of this kind of consolidation box area. And you can kind of expect higher prices when you see this kind of behavior. And so I'm expecting it to build this pattern now. A measured move, yeah, a measured move out of this pattern. And so the pattern's confirmed now that it's the brim is broken and it's moving higher. But a measured move would be up into the 1,665 area. And so, one of the other reasons why I added this to my portfolio is that it's a pretty expensive stock. It's $1,300, and so my portfolio, I think I have like 384,000 in it. I'm not going to buy a whole bunch. I think it's like 15, 16 shares, and it's not going to break the bank if this thing comes back down to the brim of the cup or even breaks back down. If it breaks back down, I'm certainly going to get out, but it's not going to be a make or break stock. And I'm only in it at 7% of the portfolio. So the fact that this stock was up slightly while the market was going down, or particularly S&P was going down 2.64%, was a positive. And so that's kind of an indication of you want to look for those stocks that are in the trend and are moving higher when the market's moving lower. One of them, somebody had posted earlier in the Substack, Oscar. Healthcare seems to be where a lot of the money is rotating to out of the tech stocks. So this is just a really nice consolidation pattern for a long time, and I know some people have been in the stock for a while. Sat through a lot of this. Kudos to you. I don't like to sit in stocks like through this. I want to wait till I see an actual break, even if it broke and then came back in. I may have support areas like I have here that I want it to stay above, but I want to participate in the stock when the action is happening. This is brutal to sit through, and it's just too much stress for me to want to sit in this. Now that it appears to be moving out of this box, is when I want to be in. Um, See strength though. If it moves above this, I call this yellow box the pinning zone. If it moves above the pinning zone, it's approaching the trigger area, I'm gonna buy. I won't buy for my Substack portfolio, but I'll buy for another portfolio that I have, and then I'll just buy shares. I won't buy options, and I'll buy a percent position. So In general, whenever I say I'm going to buy a stock, it's usually 7%. There's rare times when I'll add an additional position, an additional 7%, but usually it's just a one all 7% position. And actually, I'll talk a little bit about this later because I have different styles of trading, not just I just buy one 7% position, and I'll explain that later. But for Oscar, I want to see some strength. I want to see it move out of this box. So I want to see it move above 25, approach the trigger zone, which is at 25.60. So if it moves into this area and it's showing some stability, and it's not just a look above and fail, I'm gonna buy. And I'll wait for this trigger zone to hit, and then I'll just hold on to it. If it comes back into the box, if it closes tomorrow within the box, and it's putting in something like a reversal candle per se, then if I haven't entered, I won't enter. But if I have, I may cut it quickly. Excuse me. This particular stock has a lot of. It kind of reminds me a little of Clean Spark in that it has some pretty big moves, and so I want to see strength. That's the only thing that would motivate me to get into it. So yeah, that's Oscar. The other stock I was interested in getting in also is United Health. So United Health had this huge fall from grace. I mean, there's so much news coming out. They missed on earnings. They were being investigated for fraud. It was like the poster child for all politicians on we're gonna get down to the bottom of this. They're stealing our taxpayer money, and all it was just a political ploy for them. But it's recovered, and it's gone through quite a bit of consolidation here, and it just broke out. It broke out. It came back and tested that area, and now it looks to be moving higher. And it's actually moved out of. Let's see here. Still within that pinning zone area. Came back down. And like this is what I was talking about with Oscar. If it does this and I get in and then it comes back down, um observe it um to see how far it comes down. But this is kind of a look above and a fail. If it's just going to consolidate like before, I don't want to be in the consolidation. I want to be in the breakouts. And so what I'm looking for here is that I want to see that this breakout is confirmed and that it's moving higher. Now, what happened here, and I mentioned before that once it gets above these trigger areas, there should be an accelerated move to the next target. But and I mentioned this in the previous video is that these target or trigger areas have a lot of calls as well. So if the bulls decide, hey, I'm going to monetize my calls here, you could get this type of action where it doesn't accelerate. It actually just gets pinned back into this little area. And so I'll look to see whether there is acceleration. If I do see acceleration, then I want to be a buyer because more than likely it's going to reach the target and maybe even go higher. So now I'm just going to observe these two, Oscar and United Health, to see if we do get price movement up higher. My strategy of trading is I want to make my money and I want to get out. I do not want to sit in a stock long term and get nowhere. And I'll give you an example. Rig got into Rig. I don't know, 70 days ago or whatever. It's the only stock in my portfolio that I've been in the longest, and it broke out. And I should have. I think it hit one of my targets. I think I erased it, but I believe there was a target up here. It has much higher targets. But I think Rig a few years from now is going to be a big winner. I think the merger with Valeris is going to help with their debt issue, and it's going to there's going to be some shareholder friendly benefits from that merger, and so I want to be in it. And I bought a lot of far out of the money, some leaps. Um, I believe they're for 2028. Um, and I still have those. I'm gonna sit in those and see how they do. But what I should have done was I should have exited the position. I believe I got in at a might have been here. I think it was at 680 something that I got in, and I sat through this, and then now it's come back up. It's broken out, and then it completely fell apart. And a lot of this has to do with the fact that a lot of people were expecting oil to continue to rise because of the supply loss from the Strait of Hormuz, but that hasn't been the case. The reserves have offset a lot of that supply, and a lot of people still believe that once the war is over, that the price of oil is going to significantly drop. Um, and so, whether that's the truth or not, that's that's beside the point. It's just oil has not moved significantly higher and taken along these oil stocks like it should have. So, unfortunately, I'm still in it. I am going to probably exit Rig on Monday tomorrow. I don't have. I don't want to lose on the position. Um, Actually, I'm thinking about it. I think I got in down here because I at 80. I believe I'm in it at 580. So I'm just slightly above. So regardless, I don't want to lose on this position. I will probably exit, and then if it moves back up to the top of the range, um, then I'll re-enter. It's okay if I get in at a higher price. I just really want to capture that breakout, which I thought was going to happen here, but it didn't. Um, the fact that I had caught it at such a low at the bottom of the range, um, it's allowed me to stay in it. But this is one of the reasons why I don't like to hold on to stocks is that it's pretty much near where I bought it, and that's an opportunity loss right there where I could have used that money for something else. So, so yeah, that's that position. So am I gonna? We could talk about a little bit about software. I don't have plans to get into any software stocks. I know that there's been a recent bounce in some of them. Let's see here. Let me pull up. There's been a bounce in them. They got beaten down so much, and the narrative is to buy low and hopefully they'll recover some. And these SaaS companies are the idea that the AI is going to take them out is a bit absurd. Um, so I think people are starting to kind of get back into these, but I don't like this. I mean, it is producing a higher lows and it is forming a channel that's trending higher, but I just don't like the way that they've been. they've been trading. This is the one exception where it's kind of stayed within this trend. As long as it holds above the support, which Adobe I have at 246.88, as long as it holds above there, it should continue to either consolidate or possibly move higher. Um, and once it gets above this pinning area, which is a 250, once it gets above that, um, if I were in it, I would want to hold because then it could easily trigger to much higher targets and just kind of grind through this trend back up higher. Yeah, I mean these things have taken such a beating. Uh, Stocks have been cut more than half. Still up in the air whether in the bigger picture whether this is the bottom or not. Too enthusiastic about getting anything long right now, except like the few like Granger, maybe Oscar, because the setup is fairly simple. If it falls back into a range, then I want out, and so it's a clear setup right there. Some of these other ones that I was looking at, uh, it's in a range just like Adobe, um, just simply consolidating. IBM just kind of see anything I like. Box. You can see that there is kind of a basing pattern and it's starting to trend back up, but I don't know. I don't like the price action. I would not want to be in now. This thing could accelerate to the downside. Um, could be wrong. I mean, we could get a significant bounce, but I don't see anything here that would tell me that hey, you should buy now or you should add or just see the potential for it to go nowhere or to day. Yeah, so work some day. It just feels like it wants to come back down to the range that it broke out of. So I don't see anything there with the software stocks. I think I'm just going to stick to healthcare, to the sectors where tech is rotating out of and into to these other sectors. Another stock I was looking at is Enphase. Uh, Enphase was really choppy. It had came back down. I exited my position. I took advantage of this breakout right here. I actually captured quite a bit of it, and then I exited once it started to roll over. And then the next day, it just completely that uh, took that all that back, that correction back, and then it just rolled over. And here's an example of where you really want to pay attention to areas where there was support. It's no longer it's being revisited for what is this one, two, now the third time. In this case, third time was the charm because once it goes to that area and the third time, it's going to go down with quite a bit of velocity now. And now, granted, the market was falling. This is a painful candle. if you're long. Hope is that it catches support right at the 54.24, and if it does, you want to stay in it as long as it holds that level. But if it comes back down and tests this breakout area, I would expect a bounce in this breakout area. But the question is, how much momentum back up does that bounce get? And if it doesn't get a lot, it's going to test these areas down here. And so I'm keeping an eye on some of these stocks that could be involved with AI in some capacity. I don't think the AI story is over. When you see companies like Google accelerating the capital towards AI, the story is long from being over. I think in 2025 they spent 90 billion, and now in 2026 they expect to spend 180 billion, and that's accelerating. They fired employees so they can spend more in AI, and now Google announced that they're selling stock to increase increase money to spend more in AI, and for a very long time that's what the miners were doing, because the miners were in a capital intensive type of business model, and they were just increasing their shares. And now, if the hyperscalers are going to do that, and I think Meta announced recently that they were going to do the same, they had some layoffs. I have a friend that works for Facebook, and fortunately, he still works for them. But he's talked about how it's very it's a bit scary over there. The gravy train may end for some of those people over there, but there's just mass amounts of spending in AI. And so, if they're going to start increasing their the amount of shares that they have to throw more money at AI, the story's not going to end. And so, I want to keep track of these companies because we could easily see a rollover, a test of the breakout, or even down further, and then a move back higher, particularly in the stocks that are going to supply the energy for AI. Um, I definitely want to keep track of those, and in this case, solar. But this is one that I definitely want to keep an eye on, along with possibly some other solar stocks. And I think what I'll spend my time doing is looking at other energy plays for AI. Lastly, I just wanted to go over a trade that I made on Friday. So I have a friend who likes to trade these commodities like silver, gold. In this case, it's silver, and he bought this breakout last year. He did significantly well. And strategies that he used was that he initially bought a small piece on the breakout, and as it was continuously breaking certain levels, in this case, he bought another batch at 58.34. So he bought on this breakout right here, and he was just continuously um, looking at these levels again at 64.10, and he was just building his position larger and larger and larger. And as it was moving up higher, his gains were just enormous. And I want to say that he might have started to take some of the profits off, uh, start to get this kind of activity. And I believe he actually sold his entire position right when we started to get this squeeze. So he timed it perfectly. But that's kind of something that I did with Enphase and with SMCI. And last year, last year I turned 100% gain on my portfolio. I started off with $100,000, I doubled it by the end of the year. A lot of that had to do with silver and gold. On some of the silver trades, I was following him, and then some of the gold trades, I just kind of did a similar strategy where, usually don't want to for certain stocks, that you think may start to trend. I want to take a strategy where I'm building up the position, and that's kind of contrary to some of the way people trade in that they'll usually buy a piece. If it comes back down, you know, Buffett and some of these legendary traders will say, you should crave it even more because you know that it's undervalued and that you should buy more of it when the price is lower. And so they buy when there's these corrections down and price lower. And I don't necessarily contribute to losing positions. I don't like to do that strategy. I like to contribute to winning positions. So if it's going up higher, I want to buy more of it. As long as it's not just on a whim, I want to buy it when it breaches certain levels. And you can kind of see the initial breakout here. And we saw this in the minor stocks. Right, is that there is a point where you get these trending higher lows, it breaks out, and I like to buy on that breakout. And then if it comes up into this, and you can look on a shorter time frame, it's kind of consolidating here, and then it breaks out again. And I would add at that point. Now, my first position is a small position. I think with end phase, I took a 2%, maybe even 3% position. And then as I saw it break in certain levels, I started increasing it even more. I doubled it. I tripled it. And then as and particularly end phase, as it continued to rise, I just sat. I just sat in it. I think I had tripled it, and then I just sat in the position and waited for certain targets to hit. And that's a strategy that I don't do all the time. I only do with stocks that I think could easily start trending. And the way I know that those are the stocks that are going to could potentially trend is that they put in a long consolidation period or they've been basing for a very long time and then they're breaking out. There's potential asymmetric moves on the upside with those stocks. Now, if I'm just trading a stock and I'm trading levels, like, you know, I'm viewing this as a head and shoulders pattern, and there's a neckline, I'm not gonna buy more puts and keep shorting it on the way down because that can easily go against me. And in this case, if that's the neckline and we had a break here, it recovered. And then again, expect the expected. It broke down again, but it recovered. And so that's not to say it won't do it a third time. So I would not take that kind of strategy with this type of with this type of trade. I would only do it if it was breaking out into a trend. So, like I said, I don't do that much often. I probably have only done it maybe 4 times this year. Last year I did it a lot more because of the gold and silver, but it's just a unique strategy that I learned from a guy that was mentoring me, and it's helped me get some outside gains in trading. So on Friday, this guy that has been trading silver for a while, he pointed out that this head and shoulders pattern that was forming here, and he was waiting for this right shoulder to form, and then he was going to take the breakout here and look for the trend in silver to resume. And I didn't take that trade. I was watching it, but on the bigger picture, like I showed you before, this is a bearish this is a bearish chart. This thing is, I mean, you see these types of patterns that it wants to push lower. So on these longer as overall long term bearish. He was viewing it on a 4 hour chart as potentially bullish. Now, I was watching silver to see if it was going to come up to this line and finish the inverse head and shoulders pattern. But around the peak of this particular candle here is when the 80 or the non-farm payroll numbers came out, and it showed that the jobs number is good. That's not an issue for the Fed to want to have any incentive to lower rates. It's inflation that they need to focus on, and that's been ticking up. So the chances of them hiking have gone up significantly this year. So a hike in rate would be terrible for silver, gold, Bitcoin, any of these type of assets that need liquidity. And so I watched silver come back down. I and I took a short position here. I shorted the SIL contracts, future contracts, and I bought a few here. I waited for it to come down to this green line, and I bought a few more. And then I like again expect the expected. It bounced here, it bounced here, and it was trying to bounce here. And I waited for it to roll over. Once it broke this green area, and I think it might have been in the middle of this candle, I added just a few more, and I just sat in it. And once it hit my target, I had a short-term target of around 69, I think it was 68.99. Yeah, so it's pretty close to 69. And that's when I took half of my. So I'm sitting in another half, and I really do think that I mean, I think we're going to get a bounce on Monday, but there is a chance that we revisit these lows down here. And overall on the chart, I think that could easily come back down to the breakout area if we're able to get past those lows. My strategy for here is for it to, if it does come down to these lows, to take probably another, or to take a quarter of the position off and just let a quarter of it just run and see if we can get down into the 50s, to the mid 50s or so. And then I'll take the rest of the position off if it were to come down here. Now, I don't think it's going to come down in a straight line. Like I said, I think we're going to bounce on Monday, see how big that bounce is. And if it does come back up to the uh, 69 and a half, maybe, or maybe close to 70, I may just exit the position. But yeah, it turned out to be a really good trade. But it just goes to show you that people that are looking at both sides of the trade. And the advantage you have is that when something doesn't play out like you expect it to happen, is that you have a strategy or an idea of something you want to do if it doesn't work out. And in this case, a lot of people were, I bet you might have been looking like him at this inverse head and shoulders. And when it didn't play out, my strategy was to short it. And so you want to have, when you're trying to figure out what you want to do with a particular stock, always think of what may not happen or the counter trend idea. And so that way you have a strategy. If one happens, then you can go with that. But if it doesn't work out, then you have another strategy or a way to make money out of the situation. And in this case, it was just simply the sentiment has changed from rate cut to now rate hike. And so that's probably going to be the narrative now going into the week, that it's going to drive either this correction down further or like I said, I'm looking for more downside in the the S&P and in the Nasdaq as well. We didn't look at the Nasdaq chart, but there is rotation out of tech. Tech got up to, I believe, like 40% of the market, and I think now it's just sitting under 40%. But it got outrageously high, and now money's going to rotate out of there, and I think it's going to rotate into healthcare. I'm not certain of this, but I think it's going to rotate into out of healthcare, maybe utilities, maybe some of these other sectors that haven't moved. But I'll keep an eye on it. I'm still going to monitor the market, see how things go. I may post some things in the chat just to let everybody know what stocks may be moving, what breakouts I may be looking at. But like again, overall, I'm not going to trade very much at all, if at any, this month, and I'm probably just going to sit and wait till the later months of this year to see if there's any kind of rally to capture that last part of the potential upside of the portfolio. Right now, I'm at 84%, and so I would like to get to 100%. I'm not going to lie, but if it ended today, I'd be happy. So we'll just leave it at that. And if you have any ideas or any charts you want me to look at, or had any questions or anything, just throw them in the chat and I'll get back to you. Okay? Bye.